Hello and welcome to the Harwood Report for July 9th, 2018. I'm Keith Harwood, the host of the Harwood Report and the founder of Trade Academy. As a reminder, all of this is for educational and information purposes only and is not intended as legal or financial advice. If you have any questions, consult with a financial professional. So I'm going to go through the normal stuff I talk about normally. The equity indices have kind of made a good run here. Interesting stuff starting to set up in bonds and precious metals. Oil also as well has been coming back around. So let's just get right into it and talk about where the focus should be for this week, in my opinion. First off, fear and greed is very neutral shown. It's actually probably accurate. And why? Because markets aren't showing the same strength as some of the other indicators. Breadth is improving. The options market is saying bullish. And yet bonds have been a little bit too good of a performer and equity is not good enough. Okay? That's a big thing for me. That's where my focus has to be a little bit this week, is saying, well, risk on should probably hit some of the bonds and stocks. So where do I look at it first? S&Ps. They've started to firm here. They're retesting the June highs. Remember that we went ex-div, so basically we're trading right at the highs here, which also happens to be the March highs. If we get through here, we're going to pick up a quick $6, $7, $8. That could happen this week, but one of the things that always concerns me is these runs have started the month, and then we've gone sideways. Start the month, and then go sideways before a turn back. Start the month, and then go sideways before a little turn back. So we may be ending this part of the bull run. It may come with a quick run up and then pull back, i.e. a pop to 284 and then pull back. It may stall here. I expect the market to stall near the end of this week or beginning of next. Given that, there's some kind of nuanced ways that I want to look to trade this. I'll talk about that in the premium newsletter, though. This is not everything is free. And the premium newsletter is free for the first 2 weeks, just to remind you guys. IWM looks like it wants to break out. The Qs look like they want to break out. So keep all that in mind. The market does look like it wants to break out in general. And, of course, even the Dow Jones is kind of joining the party finally. It is now above all the key moving averages and looks like it could squeeze up to 253, 254. When everything looks bullish, I get a little nervous. So with IWM about to break out, the Q's about to break out, and diamonds maybe getting a little squeeze, the industrials, that could be my turning point. So I just got to watch for that big up move, and then that's a spot where I can start thinking about ways to fade the move rather than to pile into it. Okay? More importantly, I think right now is the bonds. So bonds have just barely started to show any weakness. Well, if risk on is happening, and the market is fine and tariffs aren't killing the market, then bond yields probably need to go a little higher. We hit the 200-day moving average in TLT and seem to be fading, and it looks like I'm looking for a move back down towards 118.5 in TLT. That's tradable. That's a good move. That's $3.50. May not happen this week. Maybe it takes a week or 2 or 3. Fine. That's a big move in a product trading at vol lows, 9%. So if I was going to get to 118.5 before the end of the month, look at all these money-making options here. I could buy the 20s for 24 cents. I could buy the 20 and a halves for 35 cents. Or I could buy these 21s for 45 cents. That's 8 vol. That's ridiculous. I look at next week if I wanted to be a little more aggressive in terms of timing, looking for this to happen faster. I'm buying 8.4 vol on the 121s at 31 cents. 8.7, still very cheap on the 120s. So where I want to focus this is the July 27th term because that's where the vol is a little cheaper and it gives me almost 3 full weeks. And I want to actually go a little lower than the 121s. Even though that's 8.4 vol, I expect that I would have to probably pay closer to 46 to execute on these. So let's say 34 cents on the 120 and a halves. That gives me just a little bit more leverage and a move down to 118.5. That's the one that really kills it. Okay, so the first break, the initial breakdown to say 121.5 or 121, these guys are going to do better, but then after that, the 0.5s work better. So if I'm looking for a buy and hold put here, it's the 0.5s. That's kind of how I'm starting to look at this, is something with a 20 to 25 delta in the next 3 weeks. That's TLT for you. Even with the break today, looks like maybe there's a little more downside based on this chart. The other big thing going on is gold. So last week I kind of talked about dollar yen chopping. Look at this just massive wedge kind of forming here. If we get above 111.40, call it, It should push us up towards this 113 range. Gold is already down to the lows of December and has bounced off of that. So we touched it. The low there was 117.40. The low on this day was 117.40. Weird how that happens. And then bounced off immediately. So gold is starting to try to catch some people expecting this to be the low. In reality, I think this is a dead cat bounce. Today's action doesn't really take that away from me because we rallied and then we've been lightening up throughout the day. I expect to see a move back to 117 and maybe lower, because if we get below 117.40, we may press down here to 115. Gold is frustrating for the long. Think about the psychology of the long here that's been holding since 125 around the beginning of the year, where it just never really took off while the market was collapsing, and now it's coming back off now that the market's rallying. It's a good situation for the short when the long is getting frustrated. That's what I'm expecting here, a frustrated long to start pushing this lower, really create some momentum to the downside. And when I look at GLD vol, let's just take a look here. Similar to TLT, vol is near the lows here. 6-month low is about just under 9%, and right now 9.3%. And if I go into the next couple of weeks, it's the same kind of idea. I can get puts really cheap, especially if I think there's a chance we can go down towards 115. Why wouldn't I go into the 117.5 puts for 29 cents at 8.4 vol? Huge leverage there. And if we just get to 117.5 again, that 117.40 level, these get slightly in the money. But this is the play for, 117.40 was support because of the first break here. But if we go again, I don't expect it to hold. That puts us down well below. So that's why I like those 117.5s from a price perspective as well. If we look at all the precious metals, I think we could make a similar argument. Silver down to 14.5. If I go to the miners, they're going to probably be a little bit slower to break because they've got the equity component. So if equities are rallying, people are a little reluctant to go short even in something where precious metals are weak. But we could push this down towards the low of the range here, towards 21.85. Junior miners probably get some push down here towards 32 and then get a real flush. So reminder, when prices fall, the producers get hurt. We always see that in what's going on with like the oil names, right? And yet these miners have not been hurt as much. I think part of it's because people are trying to allocate to precious metals. They're doing it via the equities because the equity landscape is stronger. If the precious metals wash out here, these do need to get a washout too. They just will be second to washout. So gold hits down to 115, these drop to 32, and then I expect them to really get the washout a week or two later. Let's go to oil names. USO is, there you go, consolidating. This is not a bearish oil chart, right? Everybody's worried about OPEC. OPEC announcement comes out, we rally. Everybody's hanging out up here. We're not even breaking below the 10-day moving average. We just are letting some of the stuff, some of these moving averages catch up, letting the market distribute a little bit. Some of the longs here taking a little bit of profits, maybe some shorts getting out. But generally speaking, we're just basically setting up a flag, and it seems like the momentum's going to go higher because the profit takers aren't getting aggressive. So those that have been long are not aggressively pushing it lower. And hedgers are clearly not pushing it lower. So what do we see in XLE? It's finally getting a little bit of a bid here. Looks ready to break out. It's trading above last week's high, the week before's high, I guess. June 29th high was 76.74, now trading 76.80-ish. We're looking for a move up towards 78.5. I'll talk about how I'm looking to trade that in the newsletter, as well as OIH. Notice that OIH has been a lot weaker, has a lot more upside. There's a thought here we may consolidate around this stuff. But I'm not sure that that's going to be a long-lasting consolidation if oil can even pick up a little more momentum. This could get up to 29 plus, and pretty quickly. So I'm looking for some exciting potential moves here out of the oil stuff. And as I said, I'll put that in the premium newsletter. Speaking of which, it's free for the first 2 weeks, $49 a month after that. You get a Wednesday update, you get a newsletter update with trade ideas and all of these indices that I'm talking about here. I talk a little bit more in depth about some of the components that are impacting some of these big indices. talk more about the VIX and stuff as well. And it's not going to be $49 a month for much longer. So just keep that in mind. I might keep it there for 2 weeks. It might just be 1 week. And then it's going to go up to $99. And if you sign up before I do the price change, I'll leave you in at $49. Once the price changes, though, that's it. So you can still get the first 2 weeks for free. Make your decision. After that, it goes to $49. And if you wait too long, it's going to be more expensive. So just have that in mind, guys. $49 is not lasting for long. Email me, keith@tradeacademy.co, if you are interested in any of this stuff or have any further questions. Go to tradeacademy.co if you'd like to visit my site, or call me, 312-600-8004, if you'd like to reach me by phone. Thanks again, folks, and have a wonderful week of trading.